Good afternoon, everybody. This is Harmeet from Sigma Picks. Thank you for tuning in. We're just going to be quickly going back and reviewing QQQ, IWM, and the SPY chart. And at this point, we were thinking, we're into correction, and yes, we are, and just kind of see how this is developing, and can I have an idea of what is expected, what we can look for, and so forth. So let's get started. First, we're going to be looking at the SPY chart. We got a well-formed ABC. Okay, it is 5, so it is a 5, 3, 5 correction. Okay, and we also see that there is this also very well formed ABC pattern. Okay, and that is also 5, 3, 5. Okay, so and now we are in the leg that matters. Okay, we are in this leg that matters. That tells us if this would be a complex WXY or a straightforward A, B, C zigzag. Okay, and the way you want to look at it is that, or at least the way I am looking at it, is that this region now matters. This is what's going to define what kind of correction that this is going to be developing into. Okay, is there going to be something that's larger that breaks through this 419, 420 zone? Okay, or is it going to be something that turns into a flat? Okay, and starts basing out, and then from there either breaks out or to make a new all-time high, or breaks down and continue the bearish trend. So we are at a very important juncture, as to speak, where how the markets behave within the next few weeks will tell us, how we can actually position ourselves going forward. Is it going to be a simple thing, or just more of a complicated, more complex, more thing where everybody has to do their due diligence to stay kind of ahead of the curve? So the regions to watch right now that I am mostly interested in, obviously this 428 to 420 zone. Okay, so let's just say 428 to 419 zone. Okay, so that whole area kind of encompasses that double bottom. I do expect it to have some sort of support there, if we do get there, and to have a little bit of bounce, just to see how this will go. Just to be aware, there are a lot of different things that can happen, but we don't know that. That's the part about trading the hard right edge, is that you're trading this part and you're kind of making your assumptions on what has happened previously. So this is a preliminary thing right now. We are in a very important part of this correction. It will allow us to kind of have an idea of where we could be going, and I think if we start breaking down through these zones, we will come back and revisit this chart again, and we'll look at where things break down majorly, and this it becomes more than just a correction. It turns into a crash or some sort. So, but we're not there yet. We may not get there. We will not get there. Hopefully we won't get there. So let's see how this goes. I am looking to see if I can get a quick long out of this. I am short. I did short. Okay, I did short in this move. Okay, it wasn't right here, but once it failed that 457 zone and took out that low, that's where your high probability shorts were put in, and obviously it's starting to resolve very well. I do expect it to go down a little bit, obviously to kind of see if we can get a follow through all the way down to this 430 to 428 area, and then go from there. And hopefully, you guys are staying on the right side of the trade, understanding where it is structurally, and kind of just getting yourself out of trouble if something comes really fast. This is extremely difficult trading. It may not be suited for everybody. Okay, you you really have to check your biases at the door if you're going to be trading this market right now. If you do not, you're going to get your butt handed to you. Has happened to me. It will happen to everybody. But understanding, where it can happen, you can just take yourself out of the equation and kind of figure out, what's going on. So, that being said, let's go to our next chart. Actually, there is one more thing that I wanted to show you guys. I think is well worth noting. So I'm just gonna quickly look at this SPY chart. This is your weekly chart. This is one of the simplest ways. If you're not, if you don't want to get into this EW, Elliot Wave world where things kind of, it doesn't make sense or not, just go to your weekly chart, and this is what I have set up just in case to kind of tell me what's going on. I have a cloud set up with two different EMAs. Okay, so this is a 21, the blue one is 21, and the other one, the yellow one, is 34. Okay, you can see how we're getting into that zone, and somebody who's familiar with candlesticks can immediately say, hey, those are tweezer tops, that doesn't look good. We should see a follow through. Okay, last time it was in this red zone. The red cloud cover was all the way back 2 years ago. Okay, so this wave itself took 2 years to develop. Okay, and now we're going back into correction, and that right here, the correction is also it can also be verified by Elliot Wave. So straightforward. Know that you don't have to always follow Elliot Wave if you don't know how it works properly. And yeah, there are a lot of people out there. They want to put the letters on and put the numbers on, and oh my God, look at my chart, very beautiful. There are just so many wrong counts out there. So if you don't know or don't understand, go back to your tried and true moving averages. Understand that those are as important to your analysis as anything else. Again, it's not they're any better or any worse. It's just the fact that if you are used to them, if you use them a lot, you have a better understanding of how they should behave, how price action should behave around them. Okay, so I digress from that whole topic, so we'll just go to the next one. Yeah, so this was the count that we were looking at, and I was discussing that this is QQQ, and we were discussing that this could be the end of a major cycle if it broke down to this invalid area. It did. So even though we're above it now, but it's broken down, and for all extensive purposes, this whole count was negated. So I had to go back and redo, not the whole thing, but make this area show that this was the end, and so forth, and kind of, so that's that's why everything is a preliminary. You have to understand where things are wrong, and you have to go back, look at them. Where you should know is the fact that you are in a correction. You don't know how it's going to be, so you can actually trade accordingly. Okay, so let's quickly look at the alternate count now. So this becomes really interesting. We did complete a large cycle, and that's what the fifth wave was. Okay, so we did complete this large cycle. It was truncated. That means the fifth wave right here. 1, 2, 3, 4, 5 could not clear all-time high and failed and fell through. So knowing that, just, you know, it did have this, 5 wave structure, okay? And it's also part of this larger, thing, larger count, 3, 4, and we're on the fifth count. There's, there is no mystery in this, what's going on. Just, I think everybody's smart enough to first of all see that we are developing something like that, and a head and shoulders, okay. It is also coincides with the fact that this area will most likely be tested. Okay, we should see a bounce and then some sort of capitulation if it happens to have this correction move forward. There are many thoughts. Again, this is again a lot like SPY. There are many thoughts that we have to kind of look at how this zone will end up developing. This 370 to 335 zone will end up developing. We don't know if this will be straightforward ABC again, or just like I explained in SPY that we get a flat, or if there's something more complex to that. It can go down quite a bit. I would not like to see it go below 300. If it can hold off this 334 area, I think that would be a telltale sign. Okay, so something more is happening. There's something, buyers are stepping in, or something's happening that would allow us to kind of take a pause from this bearish trades and go from there. But for all extensive purposes, there is no reason to think for now that you should stop trading it bearishly. There is, if you're nimble, you're trading these up and down. But if you do not have, if you're not in front of your computer all day, and you cannot keep up with these fast moving price action, maybe it's time to just step aside and just let it work itself out. Again, go back to your moving averages, look at that if you want to, if it makes it easier for you. But if you are an active trader, this is great, because you're doing really well with your short side, and also if you're managing risks, you're probably doing really well with your long side too. These moves are fast and furious, and there's nothing that in the macro environment telling or saying that there is going to be an end coming soon right now. There's all this geopolitical stuff that's going on, inflation, and then the Fed deciding what they're going to do. So there's a lot going on, and obviously that coincides with the correction that we're seeing in the markets themselves. So we will see how the second wave develops, since it is, a lot of times second waves don't tend to be as complex, but since it is, we ended a large cycle, one of the major cycles, you can expect this to be, a kind of a very much a complex thing for it to kind of come back within consensus that something has happened, where markets can say we can go ahead and start buying again and move from there. But again, the areas to watch: 334 and 315 zone. Those are your important ones. Let's see how this develops, and we'll go from there. All right, so IWM, we were last time we were here, we were discussing how, it broke out, failed, gap down, tried to get through the gap, did not go through, and was failing. The idea was, again, if it gets up here, that would be the point where you could start looking at a really good short idea, and it seems like that's what we're seeing. Okay, I am expecting it to go down. Obviously, I think, if it takes out that Friday's high, and yeah, expect 180. Definitely expect 180, and then 163 is not so far from there, so 10% more. So there's quite a bit. It's going to shave off quite a bit from that, and it. I mean, there's not much you can say. It broke down, has a Doris box, had a, this is a Wyckoff kind of anti-spring area. If you're familiar with Wyckoff analysis, I think some of you maybe more than I am. So, and now we're seeing this area got retested and failed, and expect this to keep moving down and complete this fifth wave, and hopefully we'll see from there how things will end up. It's, again, don't expect it to happen overnight, but when things do start to get better, we're getting better inflation data, geopolitical things are slow down, you're going to start seeing a base form. Okay, something that tells you that, okay, things are starting to improve, and we're looking forward to hopefully starting to move back up. So, but nothing's set in stone. So let's see how this develops. Right now, it's a short, straightforward. Expect it to get to at least 180, and then we'll go from there. If it does not, hey, awesome, and we'll tackle that when that happens. Thank you so much for tuning in. I really do appreciate it, and hopefully we'll keep doing this. Thank you. Bye bye.